I'm Georgia Williams with the Investing News Network, and we're here at PDAC on day 2. Joining me today is John Price, Managing Director of America's Market Intelligence. Thank you for joining me today, John.
Georgia, it's great to be here. Thanks for
Very
having me.
nice to see you. Are you enjoying the conference so far?
I am. You know, it's great to see people back. We're not quite at the full volume we were prior to the pandemic, but the enthusiasm of everybody is quite contagious.
It's very nice to be back in person.
Yeah, absolutely.
I'll just jump right into our questions.
Sure.
While commodity prices have sharply risen, so has inflation, and we are still dealing with supply chain challenges from the pandemic. How is the resource sector faring so far?
Well, you know, you're absolutely right. I think for many sectors of the economy, that is a real conundrum. But I think for miners, they can absorb a lot of cost increases given just how much metal prices have gone up. So we haven't really seen much of a slowdown. Now that may change as monetary policies change, but for the moment, there's a lot of enthusiasm, a lot of investment going forward. I work in Latin America, and there were serious supply chain interruptions early on in the pandemic, and lately also, of course, particularly when importing machinery from Asia, this has been an issue that several miners have called out to. But generally speaking, what the Latin Americans control in terms of transportation costs, in terms of labor costs, in terms of their own operational capabilities, things are going at full tilt.
That's really exciting.
Yeah.
Are you concerned about the sector and its ability to finance in the months ahead?
Yeah, I think, you know, the news yesterday in Wall Street about much higher or even higher inflation figures than they feared has really sparked an awareness of how much the Fed and other central banks are going to have to raise rates. And that certainly takes some of the froth off of the financing sector for riskier projects, riskier jurisdictions. So in times like this, you know, miners are incredibly tolerant of risk. They are some of the most risk-tolerant investors in the world. They invest in some of the most unusual locations and under really trying political, legal, regulatory environments. And so there's a kind of a culling of projects, and the riskier projects tend to be the ones that are first discarded in this environment. But there'll still be plenty of interest in the core jurisdictions and bigger projects.
Right, and it's a really interesting time because we're in a bear market in the markets, and then we're also in, you know, bull territory for commodity prices.
That's right.
So it's really interesting.
Exactly. And I think, you know, you will see a shift in some of that money that was in things like tech and others that have really gotten hurt. You'll see them shifting towards value investing, including commodities.
Right. Aside from the economic challenges arising from the pandemic, there has also been a lot of talk around resource nationalism and sort of countries shoring up their own supply of things. Are you seeing any evidence of this, and how do you think it might manifest itself?
Yeah, so resource nationalism is a term, obviously, that emerged in the 1970s in its most extreme form, where literally companies were nationalized without payment. We've come a long way since then around the world in terms of developing bilateral agreements, international investor protection agreements that are adjudicated in international courts. So I think that the term is a little bit more inflammatory than the version of resource nationalism that we actually live today. Nonetheless, in lithium in particular, where 3 or 4 countries in Latin America collectively control something like 60 to 70% of global known reserves, there is a strong temptation to at least have the state invest in lithium, whether it's to compete with the private sector, which I think we're going to see in Chile, or if they even pretend, like in Mexico and possibly Bolivia, to create a state monopoly. Now, Mexico has announced this, but people are very skeptical as to the government's ability to mount the resources and the expertise to really put together a state-owned enterprise in lithium, monopoly in lithium. Pemex, of course, what they did in oil in 1937, has a huge history in Mexico. It's both a source of pride and has also been a huge political football. But reality is that I don't think Mexico has the resources to match anything like they did in Pemex in lithium. So what it means is that investors will look elsewhere. They'll look to Argentina, they'll look to Chile, and even Bolivia.
And even the term resource nationalism is sort of very resource dependent. Like, you can't mine for things that aren't in your country.
Absolutely, absolutely.
Right.
Yeah.
And how has the move towards decarbonization impacted the Latin American mining sector?
Well, there's incredible pressure, particularly on large miners, on behalf of shareholders, activist shareholders, on behalf of the general public at large, that mining companies be more wary of how they generate electricity to operate their mines. And this really began to creep into the lexicon of mining companies and their project development about 5 years ago. But obviously it's gathered steam in the last 3 years. And I would say it really began in Latin America, in northern Chile, which is where the vast majority of the mining's been, but it's the Atacama Desert and other arid areas of northern Chile where there is a lack of water. But there's abundant solar power potential. And so you've seen the creation of desalination plants to bring in ocean water. This is very energy dependent, but instead of turning to diesel or other conventional fuels, they've turned to solar. So out of economic necessity, the first projects began, but we're seeing this more and more. I would say that from the Latin America community standpoint, and this is something that we've sort of documented in a report we put together where we measured mining risk in 16 different countries in Latin America. And community opposition is the number one pressing issue across most jurisdictions in Latin America. And use of energy or choice of energy input is not the pressing issue from the local community standpoint. It's use of water. If you're going to use our water, make sure you clean it, make sure you don't take it all, because we're also using that water for agriculture, for tourism, for other uses. So the pressure on mining companies for a greener source of energy really comes from abroad. It really comes from their shareholders. And where it makes sense, and in Latin America, in many places it makes sense, Latin America has arguably some of the greatest endowment of solar and wind energy sources in the world. And we're already seeing a very competitive solar industry at large in Brazil and in Chile. You see a big wind power industry growing in Argentina. And these will definitely be sources of power for future mining projects.
Right, and you mentioned on the report, and this is the first of its kind, I believe?
Exactly. So there's, risk is obviously an issue to all miners, and particularly for financiers of mining projects. They've generally relied on the credit scores of a country based upon its sovereign bonds. But investing or buying bonds in a country and that country's ability to pay you back is very different than the investment risk you face as a mining investor. So we created a quantifiable risk index in the hopes of aiding financiers, as well as strategic investors, operators themselves, to understand how to discount their future revenues, how to quantify the value of their project based upon the risk, and compare, say, a relatively low risk environment like Chile or Peru with a much higher risk environment like Colombia or Mexico. And how do you equate your returns in each of those two markets? You need to understand the differences of risk, and that's what we're hoping to achieve with this report.
And how would investors or miners get their hands on it?
Well, it'll be available in about 5 days on our website, which is americasmi.com, and it'll be free to download there.
That's great.
Yeah.
Thank you very much for joining me today, John. It was very lovely talking to you.
Likewise. Thanks so much, Georgia.
I'm Georgia Williams with the Investing News Network.